5 trading tips for investors who invest in the market for a time horizon of 3 to 5 years. If they want to be trading in the market for some of their positions, what are the behavioral changes that they need to do? If you want to know, keep watching. Assalamu alaikum and welcome to my channel. I am Shabbir Bhimani and I like to learn to invest in the market. In the process, I become a better investor and like to share the same on my blog and now on this YouTube channel. If you want to be an informed investor, let's start with a disclaimer. I generally tend to avoid any stock names, but if I'm sharing any names, they are just to put my point forward. None of them are an investment recommendation and you should consult a financial advisor. Tip number 1, book profit. As an investor, we generally don't tend to book profits that early and let our profits ride. But as a trader, you should be booking your profits more often. It's a good practice to book your profit in and out of your trading positions. Tip number 2, keep ego away and execute your stop loss. As an investor, we generally don't have a stop loss based on the price. The stop loss is based on the story or the thesis that we want to invest in. Uh, but as a trader, your stop loss should be based on the price. If the price is going down, you should keep your ego away and conclude that you were wrong in assessing the situation or the price movement, and you should execute your stop loss. Executing a stop loss is very tough for the investors, but this is one of the practice that you should incorporate into your trading system. Tip number 3, never average down or uh, recover your losses from a different stock. So as an investor, generally if we buy anything at say rupees 100, then once it goes to 90 and all the other investing parameters remains the same, we generally tend to add more as the stock moves down in its price. However, as a trader, you are not investing in a business, but you are trading the price volatility. So once you are trading the price volatility, if your initial decision to invest at 100 had to have a stop loss, and if that stop loss is hit, you should come out of that position. You don't need to convert your loss making position into a profitable position in the same stock. You can convert it into a different stock at a different time. So it's average of a long time that should be considered as a profit, not in each of your position as an investor, which we generally tend to do. Tip number 4, invest in your education. As an investor, you may be doing very well or you may be doing good. However, trading is a different phenomena. There are multiple studies or multiple theories that work. RSI, MACD, Bollinger Bands, support lines, trend lines. There are multiple studies that work and you should be ready to learn them and then apply them into your trading system. It is very important to invest in your education in each of them. Frame studies that works for you or you are comfortable applying, and then trade into the market. Tip number 5, make rules for your trading system and follow them. Generally, we tend to believe that 1 to 2% of profit is very easily possible in a trading. However, that's not true, because even if you make consistently 1 to 2% of profits in any trades for a consistent long period of time, in 5 years time you will have more money in your bank account than the Indian government has ever printed. So it's never possible to have consistently 1 to 2% profit. There are success ratio, and each theory has certain success ratio. Some has 70%, some have 80%, which means that you will fail at 30% of your time or 20% of the time. With the ratio of successes to failure, it determines what are the returns you will generate, and that should help you build your rules and apply them. Similarly, I have seen many investors who indulge into trading convert their trading positions into investments. So let's say if there is a loss that is on a on an there is a loss on a stock, what they do is they tend to remain invested in that stock for a very long period of time until that position is converted into a profitable one. This is the classic case of not having rules for trading or for investing, because uh, generally that I follow is I trade in different stocks and invest in different stocks. So let me share with you one example of a trade that I did after the crash of March 2020, around in sometime in 2021. I invested in a company, or rather, I traded in a company called JK Paper. It was trading at around 90 rupees and it had an EPS of around 8 rupees. In 2021, I was pretty clear that schools and colleges will open maybe in a year's time, maybe in 6 months' time, somewhere down the line, the school has to open. The education system cannot go on a digital mode, because I have my kids. I knew they were not able to cope up with the lessons that were taught on, say, mobile phone. The system was not working completely. So I knew the school has to open and it has to get back to where pre-COVID level was. And the same cannot be said with, say, IT companies, because IT companies can have their employees work from home. But with the paper sector, I saw that this is a declining sector. So I generally don't tend to invest in it for, say, 10 years, 20 years time frame. But JK Paper was a very good trading position, where I thought that once the schools open, the stock will easily double from here. So I purchased from, say, 90 to 100 in that range, and then exited at around, say, 240 to 30 range. So it was doubling my money, or 2.5x my money, in, say, around 2 years time. That was good enough trading position. This is the kind of trades that I do. But generally I tend to invest for, say, 3 years, 5 years, 10 years in a growth story, growth stock. But there are certain positions that I take which are trading positions, and my investment stocks and my trading stocks generally don't overlap. However, in some cases it may, but they don't. Generally, I have a rule, like I never convert my trading position into investment. Let's say if JK Paper would have gone down to, say, 50 rupees or 40 rupees, I would not have converted it into a investments. I had, say, one stock called Force Motors, which I purchased at a very high rate of 4,500 rupees, and I exited at 1,500 rupees. So I never converted it into an investment and kept holding it for, say, another 4 5 years. So you have to be very clear on what you want to be doing and execute the plan. Finally, I have to ask, what are the trading rules you follow? Share them in comments and I will be more than happy to adopt them.